Happy Monday, everybody. Okay, so Friday of last week, we saw some really nice movement in the gold market, right? It started out the morning at around $2,050 an ounce. All of a sudden, midday jumps up to around $2,090 an ounce. So $40 swing midday, and wasn't quite what we were expecting. So, and it's not how gold has been moving recently. So let me explain. This was in response to Fed statements. So the Fed came out saying that we're going to keep rates where they are, not lower them, and basically keep rates high, which means that if you're buying treasury bills, you're still going to be earning a lot of money on that. Now, what we've seen with gold, every time Jerome Powell gets up and talks and says we're either going to raise rates or keep them where they are, but not lower them, we see the price of gold drop. Why is that? Because the US dollar and gold are both tier one assets, right? Except that gold doesn't pay interest. It just sits there, kind of collecting dust. Meanwhile, the US dollar does pay interest. It also devalues over time through inflation. But right now, when the Fed raises rates, then that's earning interest, which makes it more attractive than gold. So every time the Fed has announced that they're going to raise rates or keep rates flat, meaning keep high rates, then we see the price of gold drop compared to the dollar, and then it slowly comes back up, often higher than it was. But then the Fed will announce that it's raising again or keeping flat, and then we see the price of gold drop, and then it slowly rises back up. So we've seen that activity. This time was different though. The Fed announced that they're actually having second thoughts about lowering interest rates. And so what you would expect is price of gold to drop a little bit and then slowly rise back up. But instead, what happened? It jumped up. Why is that? Well, I think gold is now starting to step away from the old position of gold versus the dollar and is starting to transition into more of a capital preservation tool. So regardless of whether it's earning interest or not, money is moving into gold as a way to preserve their principal. So here's a hypothetical theory, right? And I can't prove this because we don't know who was buying gold so much of it in one day on Friday that the price jumped $40. We don't know who did that. However, we have seen massive amounts of insider trading of business owners selling their own stock, right? A couple weeks ago, I talked about Jamie Dimon, the CEO of JP Morgan Chase. For the first time in his entire career, and he's in his early 70s, first time in his entire career, he is selling JP Morgan stock for cash. Mark Zuckerberg, massive amounts of selling of Meta stock. Jeff Bezos, massive amounts of selling of Amazon stock. Now, why are they selling them when their stocks at these all-time highs, right? If you think your whatever you own is going to go up in value, you don't sell it, right? So we know that they're taking chips off the table, and like JP Morgan CEO Jamie Dimon said, he's just trying to diversify his portfolio, which he's never done before in his life, but whatever, we'll give him the benefit of the doubt. Okay, so what do those individuals, and it's more than just those few, but just those as an example, what do they do with their money? Well, they're selling millions and billions of dollars worth of holdings, right? So they're not taking it down to their local credit union or putting into a CD at the local bank. And we know they're not buying into the stocks that are driving the S&P 500, right? The S&P 500 is being driven by 7 primary stocks, really one, NVIDIA, but 7 stocks are pulling the rest of the S&P 500, and they're all artificial intelligence stocks, big tech stocks. So Since those guys are selling their stock, we know they're not buying other stocks, right? So what are they doing? Well, maybe they're buying more yachts, but they've already got yachts. So I don't know about that. Maybe they're buying more planes. Maybe, I don't know. I wonder if they are transitioning into hard assets as a way to preserve wealth. Oh, they could put them in U.S. Treasuries, but we have not seen that rush in demand like we saw on Gold Friday. We haven't seen that rush in demand in U.S. Treasuries. So perhaps there's been some movement from these big stock owners that own these companies that are driving the S&P 500. Perhaps they're trading what they own and converting it into gold as a way of preserving their wealth, so that once prices come back down, their wealth is still preserved. Don't know, it's just a theory, but I kind of like it. Anyway, that's it for today, this week. One more thing though, I had a message from one of our viewers, Troy. If you're listening, here's a shout out to you. If you like the video, right below it, there's a thumbs up. Click that thumbs up. What that does is it creates more traction to the video, and it causes more people to be able to see it in the YouTube videos. So if you can, give us a thumbs up, and we'll see you next week. Take care. Bye-bye.